Good morning, viewers. A warm welcome. This is Sage. You're watching 𝐊𝐴𝐿 TV live from Sydney. This is the Global Markets Roundup show, and we bring you a glimpse of the equity, currency and commodity markets from across the globe in this show every morning. Markets continued their upward march on Wednesday and yields climbed due partly to positive corporate earnings. This trend was witnessed despite apprehension about the Delta coronavirus variant and inflation, which spurred a flight to safety earlier in the week. And Wall Street extended gains after ending Tuesday sharply higher when it snapped a several-day losing streak. Yields of the US Treasuries rose as markets regained a sense of calm. And Wall Street stocks posted their second straight gain on Wednesday with robust corporate earnings and renewed optimism about the US economic recovery fueling a risk-on rally. All three major US stock indexes added to their previous session's gains. They all were placed within 1% of their all-time closing highs, and the S&P 500 was up 0.82%. The Dow Jones gained 0.83% and the Nasdaq Composite rose 0.92%. The small-cap Russell 2000 was up 1.81%. It looks like the investors ignored the concerns of a fresh spurt of COVID cases triggered by the highly contagious Delta variant that has plagued several US states of late, and the robust earnings buoyed the market sentiment. If we look at these two shares of Verizon Communications Inc. and Coca-Cola Company, they were among those that reported major growth in the latest quarter. They signalled a strong rebound of the economy from the COVID recession. Technology and financial companies have also reported strong earnings growth over the past 4 weeks. The energy and industrial stocks led the S&P 500 segments, followed by the financials and technology stocks. The utility sector was the bottom mover, however, and investors kept a close watch on the developments surrounding President Joe Biden's infrastructure bill, which has run into Republican opposition. The bill was set for a vote for opening a formal Senate debate on the draft proposal on Wednesday. However, the GOP was irked by the move as it wanted more time. In our next segment, let us look at the newsmakers. American multinational beverage corporation Coca-Cola Company reported a 41% revenue growth to $10.13 billion in the quarter ended June 30th, with a net income of $2.64 billion or $0.68 per share, beating analysts' expectations for its second quarter earnings, and the stock was up 1.38% after the earnings report. Moving on to the next, American multinational telecommunications conglomerate Verizon Communications Inc.'s revenue rose by 10.9%, reaching $33.8 billion in the second quarter, ended June 30th. In addition, it added 275,000 postpaid phone subscribers in the quarter, exceeding expectations. Its net income was $5.9 billion or EPS of $1.40. The stock was trading 1.16% up. And American OTT content platform and production company Netflix Inc. stock declined by 4.17% a day after its second quarter earnings report. Its revenue was marginally up, $7.34 billion or EPS of $2.97 in line with the analysts' expectations. However, the entertainment company projected a lower subscriber growth in the next quarter. Let's move on now to the futures and commodities. The gold futures were down 0.42%, silver increased 1.26%, while copper rose 0.39%. The Brent oil increased 4.01% and WTI crude was up 4.49%. Now let's take a look at the bond market. The 30-year Treasury bond yields were up 3.83%, while the 10-year bond yields increased 6.70%. And the US dollar futures index decreased 0.20%. And this was the latest from the US markets. Now it's time for a short break. But please stay tuned. We'll be back with more on the UK and the Asian markets.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐴𝐿 TV.
Welcome back, viewers. Sage here. You're watching 𝐾𝐿𝐼𝐴 TV live from Sydney. This is the Global Markets Roundup show. Let us now start with the UK market update. A slew of upbeat updates from the European blue chip firms helped the region's benchmark index post its best session in 11 weeks on Wednesday and further recover from Monday's sharp losses, while the travel stocks roared back after weeks of declines. The Pan-European Stock 600 index rose 1.7%, extending Tuesday's small gains, and travel and leisure stocks jumped 3.7% after getting hammered recently by worries about a resurgence in COVID-19 cases. And borrowing costs across the euro area rose on Wednesday, pulling away from the multi-month lows hit the previous day. Long-dated sovereign bond yields in the United States and Europe have fallen 6 to 7 basis points this week as a surge in COVID-19 variants adds to a sense that economic growth has now peaked and that any pickup in inflation will prove only transitory. The London markets traded in a green zone boosted by travel and retail stocks, and moreover the public sector net borrowings had dropped to £22.8 billion during June of 2021. In our next segment, let us look at the newsmakers. Fashion retailer Next shares surged by about 8.39% after the company had raised full-year guidance boosted by the robust sales during the second quarter. And moreover, the company expects a full-year pre-tax profits of around £750 million. And next up, Europe's leading independent provider of IT infrastructure services, Computacenter. Its shares climbed by around 5.94% after the company had anticipated full-year adjusted pre-tax profit for the first half to remain around 50% ahead of its equivalent period the prior year. Let's move on again to the British multinational postal service, and courier company Royal Mail stated that their parcel volumes had started to decline after the relaxation of COVID-19 related restrictions. However, the company had registered a revenue growth of around 12.5% during the first quarter, and furthermore the shares went down by around 3.20%. Let's move on now from the UK to the Japanese market. Japan's shares snapped a 5-day losing streak on Wednesday as investors bought stocks on dips over cautious earnings optimism ahead of a long weekend that will mark the start of the Tokyo 2020 Olympics. The Nikkei share average closed 0.58% higher, bouncing back from Tuesday's 6-month low, though it failed to stay above a key chart level from its 200-day moving average. Now let's take a look at how China's market fared on Wednesday. China stocks rose on Wednesday with Shenzhen's tech-heavy Chi Next index hitting a 6-year high, and as shares of natural resources companies jumped. The blue chip CSI 300 index rose 0.7%, while the Shanghai Composite Index gained 0.7%. Moving on to the next Asian market. In South Korea, shares ended lower for a fourth straight session on Wednesday as concerns that spiking coronavirus cases could impede the global economic recovery outweighed positive sentiments from the upbeat trade data. The benchmark Kospi closed down 0.52%. And so that's how the UK and the Asian markets performed yesterday. It's time for a short break, but after the break we'll take a look at the markets a little closer to home, so please stay tuned with 𝐾𝐿𝐼𝐴 TV.
Hi, this is Andy Liu broadcasting from 𝐊𝐼𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐼𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐼𝐴 TV and join me.
Welcome back, viewers. Sage again, and you are watching 𝐾𝐿𝐼𝐴 TV live from Sydney. This is the Global Markets Roundup show. So as promised, let's take a look at the Australian share market's performance. The Australian stock market is on the higher side on Thursday despite fears over the Delta coronavirus variant and inflation, after Wall Street continued its rebound as investors shifted their focus to the corporate earnings season. The Australian tech shares are expected to trade lower on Thursday after the tech-heavy Nasdaq Composite closed higher overnight, and domestic tech shares such as Xero, Afterpay and BrainChip Holdings could trade in the green today. Major energy stocks such as Viva Energy Group, Santos and Woodside Petroleum could also rise today, and the Australian Bureau of Statistics would release data on international merchandise trade, labour force and weekly payroll jobs and wages this Thursday. A European Central Bank meeting is scheduled today as well. Thanks for joining us on that report. That is all for now, but please stay tuned with 𝐾ALKINE TV for more live market updates. We will be back with more news on the markets, economy and diverse themes and sectors. Sage signing off.